On Tuesday, the New Zealand versus U.S. dollar went up and tested its 100-day moving average and backed off. In trading here today, the price went back up to that 100-day moving average, and what happened? It backed off again. So let's take a look at this from a technical perspective and make sense of it for you as a trader. Looking at the 4-hour chart, this blue line represents the 100-day moving average. You can see it by the D1 right here and the 100 right there. It's a simple moving average. It came in at 59.5 yesterday and today. As a matter of fact, it's a sideways moving average as it's in the middle of this about 100 days of up and down price action right through here. In trading here today, the price moved back up to that level, actually moved just a bit above it, only to find willing sellers against that level and rotate it back to the downside once again. So there was a little bit of a break to the upside, but it failed. The price rotated lower. We're currently trading at 0.59478, and we have the same decision that we had in trading yesterday. That is that if the price is going to go lower, it needs to get back below these lows right through here. Mark them as levels of importance. So you can go back in time, you kind of see some other times where the price came right at that 0.59376 level and either found support or resistance in time. Admittedly, there's a lot of times where the price moved above and below that level without really paying attention to it. But more recently, the high prices back here came up to that level, found willing sellers before moving to the downside. So this level right here at 0.59376 is going to be a level that I'm going to be watching on the downside, that if the sellers are to take back or gain more confidence, let's not say take back, but gain more confidence, they need to get back below that level. If they're able to do that, then we could look toward the 200-bar moving average on the 4-hour chart. We're starting to move down. That was the same thing that I probably spoke about in yesterday's analysis of the New Zealand versus U.S. dollar. It doesn't change. What happened in trading here today off the move off the highs was that the price low did not get down to that 200-bar moving average, started to move back higher, and that gave the buyers the go-ahead to push higher once it moved back above the 59.37 level. So it's going to be a barometer for traders. If we do hold support above it, then ultimately we're going to break above the 100-day moving average on the top side and look for further upside momentum. Alternatively, break below this level and we head back down toward the 200-bar moving average, and that would be the target. So there you have it. A look at the New Zealand versus U.S. dollar from a technical perspective. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.